booklet which I gave will be missing. Otherwise, it will be there. Let's talk about capital adequacy today.
Yes.
I think that should be fine, no? Okay. So, to start with, regulation had addressed the liquidity risk. Then around early 80s, they realized that there is a problem. Because what is a bank? This thing, basically, bank you have capital. Yeah, we were discussing what is the use of capital. You have capital, you have deposits. On this side, you have assets, loans. It's in RBI language, it's always called loans and advances. Then you have investments. And investments, you have two types. One is SLR, non-SLR, fixed income, and the third type is equity. Equity exposure includes the shares that they hold, loans given to share brokers, and any exposure, direct or indirect. So equity held cannot be more than 20% of the net worth. So I am putting everything in capital and reserves. Now, I think we will have to go through this exercise. Let's put some figures here. Let's say capital is 9, deposits. Capital is 9, loans and advances and interest. Let's say this is 100. Let's make capital as 12. And the investment, all these as say 100. So you have 200 and cash, RBI. Let's say cash is 100, so you need...
Cash is 100 or 10?
10, sorry. Cash is 10, so you have 210. You have 12 here. Let's make this 10 figures will be easy. We will correct it now. Let's say the deposits are 200. If you have 200 as deposits, you need to have RBI, let's take as 5% easy. 5 into 1% is 2, 5 is 10. So capital will have to be 6. We can have still more loans in advance. Okay. SLR is 24.
So there is some restriction that 10% capital should be there, or?
Capital restriction is 9% of risk-weighted assets. I am presuming risk-weighted assets are 100. I am presuming these are all non-SLR. This will come to this little later. So this kind of balance sheet seems okay, except that we have 100 is we need only 10, but we have capital more than that. And so we can have a capital of say 15 and deposits of 205. You have 220 here. 220. This balance sheet should be sort of okay.
220 both sides, huh?
220. Now, this is a kind of a balance sheet which is bank. Let's take one thing. Bank makes first step, first iteration. Bank makes there's something called P&L account, which is basically profit loss, which is interest received minus interest paid. Okay. Plus fees earned minus establishment expenses.
That includes building and salaries and everything.
Yeah, building, rent, salaries, interest received would be on this side, including the coupons that you get. Interest paid is on deposits. Fees earned is non-banking business, which we'll discuss later, which I don't think you are keen on right now. You don't need to do work. But to understand banking, this is also necessary. Open all records. Okay. To this, we will have to add one major thing, that is treasury income. Shalini, I think it will be a good idea for you to see the advertisements that are coming from states, all banks. Their final statements of accounts are there. Incidentally, there, they don't give the balance sheet.
They give only P&L.
They give P&L. That's the issue I was discussing. No?
But why they don't keep the balance sheet over there, sir?
Can you guess? Why should banks advertise their statement of position? Whatever.
To know the financial status of where the bank stands.
But that will be strategic information, I
Why
guess.
should we? We don't advertise. MBA doesn't advertise.
But banks have to do.
Why?
As per the regulations,
Yeah, which regulation? They are forced to give.
they are forced to give.
Yeah. So even if they make a loss, they have to give it. Why? Who are the regulators?
RBI.
I said who are.
RBI is one.
RBI is one. RBI is a regulator because it gives a license to accept deposits. Okay. They are also registered companies. The company requires that you must give the cash flow statement.
Financial statement.
Registrar.
Cash flow. Where the money came, interest earned, interest expended, etc. That is the dilemma which I will discuss next class. That who are the people who are interested in this? RBI is one, shareholders are one, depositors are one. Are these people interested? Are these people interested? Should the government bother about who is holding their security? You will have to think. I have my ideas, he has his ideas, but you will have to come out with your ideas.
But is it because of a strategic reason?
Which one?
Not giving a balance sheet?
It could be.
Because if you expose whatever your, because this is in a way telling that what is your portfolio.
Yeah.
Because this is where the profitability is, if you can do it well, then it could be an indication to
See,
some.
there are two things. One is there is a balance sheet. Now, when the RBI gives, when the banks give their balance sheet, it could be positive strategic, saying that we have such a big balance sheet, like State Bank says. But if you have not done well, you don't want to indicate these things, kitna deposits hai, you may have want to hide, but that's not much of a big thing. If I have deposits, I have deposits. What kind of deposits may also be,
That's what I was thinking.
But I am thinking from the other side, who is interested in the balance sheet? Who should be interested in the balance sheet? And who is interested in this? Basically, this is given in a required format. That is called a listing agreement. As per the listing agreement, requirements of SEBI and the exchange, stock exchange, they have to give this in a particular format.
But this is, SEBI comes in only when the banks are listed, isn't it?
Yeah.
If the bank is not listed, like few years back, most of the banks were not listed. Then they were not.
And this was not required. RBI says that this should be published in one daily.
EPW carries a lot of these details of banks, like thousands, hundreds. I mean, normally it's very detailed.
I don't know why they have. I have one EPW where all the foreign banks have published this. Maybe, see, it's a little tricky thing. The regulation says you must publish.
Because EPW hardly anybody.
The cheaper one, cheapest. Like Financial Express used to be the cheapest advertising paper, business paper.
Okay.
So they all published in Financial Express. That was their strategy. The Financial Express's strategy was to make it so cheap that everybody comes and publishes it there.
I was wondering why EPW has been picked up, because is it the cheapest for some reason? Because you see, every alternate issue, whenever these dates are around, there will be half EPW will be like.
Yeah, some order. I have one last year's copy. I'm waiting for this year. So they'll all come in that.
There also they give only P&L, not balance.
No, RBI requires this to be given. The balance sheet will be published in one of the papers.
Or they give it separately, one page, sometimes
No,
this.
this is the listing agreement which will be published now. Everybody is publishing this, and that's what I'm saying. The shareholders are interested in this.
Hmm.
The RBI law requires this, so they'll publish somewhere. Nobody seems to be bothered about this. But according to me, the depositors should be concerned about this, but the depositors feel that the RBI is taking care of it, so why should I? This is a very famous statement that the depositors are, what should I say, irresponsible. And also, if you see, most of the deposits are likely to be within the insured amount. The insured deposits, the depositors who have less than 1 lakh of rupees are just not bothered because they are insured. So that's where moral hazard is.
So I think people will be more worried about the private and the multinational banks balance sheet rather than the public sector banks balance sheet.
Depositors are not in India. My hunch, and perhaps it can be proved by primary data collection, that the depositors just don't bother.
No, if I am a small borrower within 1 lakh range or within that, I'm more likely to be in public sector bank.
Borrower or depositor?
Sorry, depositor. Whereas if I'm a bigger one, which is more likely, if you take the average deposit, average of the rupees or whatever, it will be much higher for multinational banks than the private
No, it's the
sector.
other way. Because the assumption is that the public sector banks are owned by the government and they will not close down.
So that is one. Thing is, private sector banks, I will be more careful about if I am a depositor. Suppose I put $1 million in the, or 1 million
How
rupees.
do you know? With this balance sheet, you won't know whether the bank is okay or not.
Unless I have the details and.
Yeah. Some students have done research on the campuses. They have found that for transactions like credit cards and other remittances and all, people prefer foreign banks. Though the fees are very high. But for savings, they prefer public sector banks.
The study was done in MDA campus.
Yeah. Kacha kind of study.
No, I'm just trying to.
It can be done. It's a useful thing to.
No, I'm just thinking, in the MDA campus, who are the people who normally come? Their kind of a background, are they from the... They're more, I think, risk covers people in MDA, I would see.
No, it's like this, If you have a large amount and if you are capable of deciding whether the bank is safe or not, or bank is going to be around or not, then you may want to keep your deposit with their bank. But if you have so much of knowledge, then why do you go to a bank? Banks use the lowest return possible, always, except exceptional circumstances. If you have a knowledge, then you may prefer, if you are willing to take risk, if you have risk appetite, you may want to go to a mutual fund or you may want to go to
equity
bond market. There is a scope there. And who are the people who keep money in large amounts in a bank? They are the retired people or the risk averse people. In fact, there is a lot of scope for finding out who these people are and trying to market your product for banks on this side. Isn't it? Offhand, when you go to a bank, you will find rural areas, for example. They all keep money in a bank.
Or post office.
Or post office. Post office is also part of a bank. If they are willing to keep in a post office, you, as a chairman of a bank, I can try to attract those deposits. But they are risk averse, basically. Or you have retired people. Huge numbers retired people come there. So, the bankers till date, sort of, they are not aware who is coming, they are not proactive. They are
not so interested in kind of because directly at the lower level it's not an incentive for them.
Yeah.
And at the bank it has an interest, but at the individual retail level,
that is a small change. This new progressive public sector banks like Union Bank and all are trying to bring.
so there are latent potential which can be.
Huge amount of it. Huge amount. Because the retired people, how to deal with them is little difficult. They have a solid money, it remains with you. And, now the latest thing, if you have read the newspapers, today's newspaper, State Bank has, among the highlights, it has given 23% CASA, current account, savings account. 23% of the total deposits are CASA. So they are very happy because there is a low deposit, low cost.
Can we really say that? Because unless you have the counterpart at how long it stays with you. Because current account is a very quickly going and coming.
Yeah, but then if you see current account like that, you still have a stable deposit. In fact, this is one question I asked in class. I explained and they don't get it. My question that was asked was, Goldman Sachs was converted from an investment bank to a commercial bank. You know this, no? Now, why do you think that Goldman Sachs as a commercial bank will be more viable than everybody said they'll get low-cost deposits? Low-cost deposits are CASA. You have CASA and you have term deposits. This is high cost, this is low cost.
So that is true, but the thing is term deposits are with you for a stable period.
Then issue bonds, they are more stable.
No, like when anybody opens a current account, even if you're not paying anything to that guy.
Yeah. See, theoretically, all of them would, they can withdraw on, let's say this is for a fixed period, and let's say 3 years, 2 years. This is, there's something I don't get, I'm not getting any pretty terminology, but something like an insurance thing. When you have 1 million depositors, on an average,
Law of large numbers. Randomly, let's say people are coming or people are going, or what I say is that the situation is normal situation. There is no unnecessary pressure either side. Like right now, banks are flush with funds. This is a peculiar. There is no unnecessary, like we don't have a festival season that people are working on or anything. If you take that, the number of people who are putting in money and the number of people who are taking out money, it's the same. It's like the Ponzi scheme. And therefore, the stability of CASA is seen, you have to see the figures, then you can see. We don't get individual figures, but if you want, RBI gives for the bank as a whole, you can check it out. No, I'm just saying that, let me give you another extreme example. Every staff has a savings account with, say, Corporation Bank. Beginning of the month, everything is full. End of the month, more or less zero. So it counts for you for a month, possibly. So these saving deposits are, I think, more or less like that.
Yeah.
So that money is available, yes, for a month to you, but can you lend it out in a way which can be, will you lend long term?
No, it can be. See, what bankers do is, if you take the aggregate of the million accounts of savings banks, let us say, not all are salaried people. ICICI went in for salary, HDFC and ICICI went in hammer and tongs for getting salaried accounts. I have queried the ICICI fellow who was doing it. Unko usme milna kya hai? As you said, within the 10th or the 15th, most of the money is withdrawn. All of us do that. They went in for that because they wanted to get customer base. ICICI went in through the credit card. They have started issuing cheap and cheaper credit card. Finally, they said no. But that information was used to approach to make it different. But yeah, there are people with savings banks who are not salary.
So that was a marketing strategy which they adopted.
That ICICI and HDFC was a marketing strategy. After a year or 2 years, I think, because Bennett Coleman also had HDFC salaried account. Then they said you have to have a minimum balance. Now, in your case, in my case, in her case, a minimum of 1,000 rupees is to be kept. 1 million into 1,000 is 1,000 million rupees I have, which you just cannot withdraw. You won't withdraw.
Unless there's a bank run problem or something.
Unless there is if there is a bank run, then everything is lost. So now
No, but there also, if you're a public sector bank, that probability is less for you.
Yeah. No, the answer to the question is that though CASA is withdrawable on
Short
demand, on demand. It's basically on demand. They just walked in and issued it. There is a stable, if you take the entire, like you said, law of large numbers or whatever, there is a certain amount which is stable. It could be the minimum balance that you have set, or that is why analysis of who is holding your account becomes very important in banking, which public sector banks are now trying to do. ICICI is old hat. You heard of CRM, no? So application of CRM is very important.
And so one important thing, why different banks having different minimum balance to be kept with them?
Yeah. Why? You are. I know the answer.
I mean, I've seen.
Have you thought of it?
Yeah, foreign sector bank. I mean, they charge more. They say you have to keep 5,000.
Don't start thinking like that. You tell me.
Maybe because of some regulatory framework is there that the risk being involved.
When did you last buy vegetables?
Yesterday. Yesterday.
आपने कुछ खरीदा होगा ना? Who sets that price? Why did he not charge you more, or why did he not give you less? Some people give you less.
It's because the price is being determined because of the availability of the vegetables in the market.
Cost of acquisition.
The cost of acquisition.
One is cost of acquisition. Okay, but in this case they are acquiring money. Isn't it? He himself is acquiring money. So, what is it that he is getting and what is it that you are getting? Based on that, the pricing takes place. Have you ever traveled in a bus on May, June in North India?
Yes.
How much money did you give for a bottle of cold water? 15 rupees, 12 rupees? Anything that he says. Why? Because you want to have it. He knows that you will have it in any case. That's why when you see the pricing of any product.
It depends on the need of your.
So that's why first I said deposit is a product. First thing you identify your customer and what he needs. What is your need? What is his need and my need as salary earner?
So need analysis is being done.
You can bring some economics here also, no? I mean, the thing is.
You can do a deep study in that, but basically, what is it that the bank gets? We didn't discuss that. I wanted to do it later. For each product, we can discuss. The customer has a need for transaction. Customer has a need for safety. Take these two, then the customer should be willing to pay the bank. But the bank is offering a rate of interest. Current account, we don't offer, banks don't offer any rate of interest because they are offering a service. They charge you money for that. So what they do is there's something called implicit pricing and explicit pricing. In the explicit pricing, let us say, they will say per transaction will charge you 25% or 1 rupee let us say. You want to put through a million transactions, put through a million transactions. You want to put through 2 transactions, put through 2 transactions. Per checkbook will charge you so much.
It's a no-frill account kind of.
No frill account.
Everything is charged.
Open. It's called explicit. You know, in ESCP Paris, you make a photocopy, you must give some 20 cents or 20 cents. Anybody, everybody. Faculty does it, they have a card, it is charged, and they have a limit up to which it is charged. With computers, anything and everything can be priced and recorded. You go. Explicit pricing is there. It is possible. On the other hand, if they tell me and him as savings bank account people, every check will charge you 1.5 rupees. Immediately, you charge this, you do that, etc. Instead of that, they say you keep 1,000 rupees. The minimum balance that is there, what does the bank get out of the minimum balance? Stability. He has 1,000 rupees from each bank account, and let us say his earnings on this side is, say, 7%. Here you get 7%.
At least that much.
7%. So he gets 70 rupees out of me per year. Then you calculate how many checks, whether it is okay, whether it's not okay.
You get a free checkbook, you get a
Yeah,
free
even
ATM card.
salary account, I mean, if you are going for making a check, they don't charge you for making checks and all that.
Draft.
DD draft and all that. I mean, this is for the salary account. If you are having that salary, if you are not having that salary account, they will not give you that type of facility at all.
So they charge indirectly.
They charge you.
Charge.
A minimum balance is called implicit price. If you want to have a small case, you can try it out, you can work it out. You can actually work out whether this customer, whether Sunil Asra is a good customer or not.
I've done a small study. I mean, we were being taught how to do the survey. In that, I've taken two banks. One was Axis Bank and one was the Corporation Bank. And I was checking that why the people prefer the Corporation Bank more than the Axis Bank. I mean, this was the result.
What was the result?
That was I mean, because of this, this is a public sector bank, we feel safety, we feel regard, and the type of services they are handling. I mean, and also it depends on the quality of services they were providing. This is what I've done in Sector 14 for 7 days. And the analysis, at the end of analysis, I mean, I've recorded around 20-25 interviews.
So suppose Corporation Bank charges for every cash withdrawal $10. Will they go? The bank itself, I presume the bank itself doesn't know how much it costs. Now Sunil Asra has, let's say, a savings bank with me, and he keeps a balance of 1,500 like I do in my savings bank account. Is he a good customer? I'll have to see what else he does. It's called relationship pricing. Yeah, you need to sit down there and work on. But you need to, I mean, there are these two pricing issues. The basic thing that you should know is that each transaction costs. And unless you recover that cost, it's not worth having an account. Second thing is that when you want to recover, either you recover directly. In my probation days, we used to charge current account holders per page of their transaction. Every month, so much we charge. Or you do what is called implicit pricing. I think Yes Bank has it. In your current account, if you keep 1 lakh, we'll give you the following facility. It's a business. It's coming. It's slowly coming.
But I think is it not done partly because bank, and as is true for many other big companies, they're multi-product firms. So cost separation at times is not very easy.
It's not so difficult also. With computers, it's not so difficult.
No, now possibly yes, but the computerization in the public bank is still not as much as.
It's not as much, but you can do at branch level and get some data. Then you do in research, no? That you take a sample and then you apply it to the universe. You can do it. It's not because ultimately these are available.
No, these are available. What I'm trying to say is that one is that then if you get this information, then you have to kind of create incentive at the branch level, so that when you get
now that problem is gone because the incentive at the branch level to maintain the record or to
one is record, and then basically somebody has to do the calculation, isn't it? This price.
That is not very difficult now because all branches are hooked on to a central computer.
Because I think the private sector banks have been doing it long back because they were computerized much earlier.
No, with computerization, finding out what on an average we spend on check collect, one check sent for clearing or this one, it's not very difficult. For us, sitting here and seeing these two published information, it's difficult.
No, that is true. No, but I'll just give you another example. Like I have an account with HDFC and Corporation Bank. For some reason, I think we were buying a car, so we needed some bank statement. Now, HDFC, since it's a more professionally run bank, immediately said, if you want the statement, we'll give you last 3 years, but we'll charge you 100 rupees. Corporation Bank has not really, and then they now made it electronic also. If you ask that we will not give you the hard copy, we'll give you soft copy and email it to you free of cost. corporation bank still is not interested in that. But this year I found they also now got into that. So I had this, again I needed for the loan, so I said, I need a statement. He said, 100 rupees you pay, you can get it immediately. I said, no, if I have a passbook, things that's free. So then next time I went for the passbook. But somehow I said, can you email it to me? He said, no, that system is still not. So I mean,
that problem is there. With the corporation bank, what has happened is they have what is called core banking solution, which is basically full connectivity.
But they don't have that online banking front at all.
They have.
But they don't, I mean, that was not a great inconvenience. We are trying for last 8 and 9 months. It's not working at all, sir.
Officially they have.
Officially they have given the PIN number also, the password also, but that's not working.
No, that is the issue. If you study public sector banks, that is the issue because they have historical baggage. You see, core banking solution, like for example, I have an account in Gurgaon, and my wife has an account. I mean, both of us have accounts, one in Gurgaon, one in Vasanthpur. This is my salary account, that is her salary account. Or rather, she puts all her money there, she operates it. I gave a check to them saying that you credit. I gave a check to her and she deposited. They used their computer and credited immediately and charged us 60 bucks or 70 bucks. So we said, why? Remove that. So no, we use what is called anywhere banking. So I said, I didn't ask you for anywhere banking. It's a clearing check. It could be my own check, but it's a clearing check. So for clearing, you cannot charge. Then they reverse. Now what happens is the people at the counter, they are the face of the bank. They are not trained. Or then that fellow started crying. He said, sir, what is the system? What can I do? Now if the system calculates it and it does it, it doesn't work. Now what has happened is, since we complained, and he said we'll take you for this to what is called ombudsman, and you'll have to pay a big price, etc., etc. And because, like the pedigree of both of us, they reversed it. Now whenever I give a check, even though there is no urgency, they do it, they're sitting there, and then they manual override, they don't charge us. Now the head office people, systems people have to sit and think about it. Now, anywhere banking, now State Bank of India has put up charges. If you go to State Bank of India, you must study that. It's very interesting. If I get my passbook updated in Gurgaon, I must give 10 rupees.
I mean, the account is in Gurgaon only.
No, my account is in, let's say, Delhi.
Okay. Another
If
branch.
I do it in Delhi, in the same branch, no, I don't have it. Now, so much of money is being spent in this, is it really worth it? I really don't know. You have to take a call on that. You have to charge, we will charge for everything. ICICI Bank also tried this. He said, you don't come into the office. If you come into the office, you pay 50 rupees.
Citibank and all have this.
Yes. Citibank and all, they don't need you. So, people, see, again, these are products. All marketing rules, regulations, ideas, theories, techniques apply to these products, including lifestyle products. People pay a huge premium for lifestyle products. You put an A on this shirt, it's arrow shirt, we are willing to pay so much for that. Isn't it? What is lifestyle product?
It's like personalized checkbook.
Yeah. It's like a short fellow going in an executive class. What do you have to do? I mean, you don't need anything. Personalized checkbook, they gave us personalized checkbook. Now, next time I go there, no, you go, I'll send you a checkbook. I said, मुझे अभी चाहिए.
They are not able to follow it up.
In Paris, my son went. In France, it takes more than 3 weeks to open an account. On the other hand, in USA, to deposit a check, you don't have to go into any bank. Their banking is really wonderful. You go to the ATM, you punch in your card, you get the access, then you say, I'm going to put this much check, then it flashes saying that insert the check. So just insert the check. It reads the check. If you put it ulta, it says insert the check and it says how to insert it. There's a video there. So you insert it It says check received, it gives you a photocopy of the check, transaction term and the photocopy of the check, and you keep it there. In fact, my son just threw it off there, so it is already gone. Then they do the back-end processing. It may take a day, it may take 2 days. You don't have to fill a challan and all that. You put the check, nobody goes into a bank. But if you enter a bank, there is a person, just like in a 5-star hotel, lobby manager, one lady or one person is there, is there. The moment you enter, you are approached by someone, and you have to say, I have to do this transaction. Then there is a list it up. If you want to withdraw cash, you can go there. If you want to withdraw more than $100, you can withdraw at the counter. Less than $100, they charge you money for withdrawing at the counter. Makes sense. He says there is an ATM, why don't you use that? If you prefer to withdraw at the counter, you come and pay. I changed currency. They wanted identification. So my son was there, he said, I'm not. You show the card, that is the identification software. Then they said, we have a passport, I said, no form filling, nothing. She took the passport, she typed out the thing, she gave me the money. They put it in an envelope and did it. Meanwhile, you can sit there and have coffee. If it is slightly complicated, like you want to make a remittance or you want to opening of FD, you can do it at the ATM or you can do it online. Making a remittance, you sit with the counselor. Anyway, that is banking. What we have to discuss is how to, what all applies to this. What I want to discuss today is the following. I would like to do this study. What is happening is that if you give this, who is interested in this? The shareholder. Why is he interested? Basic assumption is the shareholder is holding shares. Okay? What is he interested in? Whether the value of the share will go up or go down. If it is likely to go down, he will sell it. If it is likely to go up, he will hold it. Wherever my logic is wrong, he tells me. Okay? And we say that the value of the share is the discounted value of future earnings, cash flow. That's one simplest way of doing it. Or the value of a share, the share price. The share price is a function of future cash flow, future profitability of cash flow. So, based on this, the shareholder is going to decide whether the value of that share, the share price, is okay or not. And let's say that he feels he doesn't have a good future. The future earnings of the bank, if they are not optimistic, the shareholder will sell the share. And the share price will fall. If the share price decline is significant and drastic, does it mean that the bank is not stable? This has happened in the last 1 or 2 years. When the share prices of Northern Rock fell, the shareholders think it is not worth it. But the depositors decided that the bank is not okay and there was a run on the bank. This is one issue of the linkage between the share price and the deposit. The depositors, last class we discussed, should be bothered about only the net worth. As long as these valued properly, so this minus this should be positive. That means his money is safe. Okay? So this one issue is there.
But I'm sure every country has deposit insurance, isn't it?
Yeah.
To that extent, if you cross that limit, then you should be worried. Before that, you're not worried, because the thing is that deposit insurer will take care of your
but
psychology.
1 lakh like in India is not much. Then you have another dimension to this. Then if the deposit insurance is very high or significantly high, then the depositors are just not bothered, which in a way may be good for the stability of the bank.
No, but at least, but the thing is, I think psychologically they get more worried and they just immediately, whenever there's any problem, they just quickly go and they don't even care that I have deposit insurance.
Since it's a game of faith, does a drastic, let's say the share price is like that and it becomes like this. This does not necessarily mean that the deposits have been eroded, or it does not mean that the bank is not stable.
But it does indicate some problem on the asset side, isn't it? If your share price
It indicates that the market is not happy with the results. Or
yes, that's true. But the market is not happy because somewhere, well,
no, but the market is still willing to hold at this level. No?
Yeah, which means in a way, what you're expecting a firm.
No, let's say this is 100 rupees and this is 800 rupees. It is still valuing the company positively.
That is true. But now market is expecting this bank to be much less profitable in the coming future, which basically means your asset quality.
The seller feels that there is going to be a problem and they sell. But you must remember, there are buyers also. Somebody let's say almost all the shares have been, quite a significant volume is there, and there are significant number of people who feel that at 100, it's a share worth holding, which means that at 100 they expect a return more than fixed income security.
Yeah, that is true. But somebody who's buying at 100, even if it goes up to 150, he got a 50% return.
Yeah.
Whereas the guy who is kind of at 800 obviously expects the profits are not going to be that much.
Yeah.
So even if 150 might sound logical for 100 rupee buyer, maybe it's completely illogical for keeping it at 100.
So, if you are buying at 800, and let us say that the earnings per share has nothing to do with this. Okay? Share price. Let's say earnings per share are 50. Make it 20. Like more interesting. More real. Earnings per share are 20. Okay? Now, if the share price was 8, we expect next year EPS to be 20. Okay? And if I buy a share at 800, my earnings will be 20 by 800. But if the share price falls to 100, my earnings per share is 20, and I have given 100, so I earn 20%, which is significantly larger than the fixed income. But I am still earning 20 per share. I am a profit-making bank, and depositors should not be worried about it. This is a dilemma. I have no answers, I have only questions. This is the SPM class, I said let's raise it.
No, but I just still trying to understand. The share price is falling. Somewhere there's something happened in the PL account, isn't it? That's the response to that must be the share price falling.
No, it has not. Something has happened here, or it could be like when Tata bought Chorus, the share price fell. Because share price is a function of anticipated, it's a future anticipation. But it doesn't mean that it is loss-making.
No, loss-making is not the issue. Issue is suppose you are 30% profit making. Now you only 10% market expects you to be profit making. Then obviously I would find it's not going to be worth it in the future.
Yeah, as an investor you know. But as a depositor.
Now that becomes how correct the people who are analyzing the market are. And if they are correct, then obviously there's a lot of these faith issue here.
Yeah. No, how correct the market people are. First of all, at best of times, they are 50-50. They're correct or not correct. That is the dilemma which is there. Because if people could predict that this is what exactly it is, then the fluctuations in the market shouldn't happen at all. But even if you take that market knows, or market is the best judge, even then, it doesn't mean that the deposits are eroded, or it doesn't mean that the interest will not be paid. does it mean that the deposits are not safe?
I mean, I think it will be interesting to look at the empirical data and where the share prices are falling. Depositors, I mean, the thing is, it may just be if this share price falls, depositors go bar. I mean,
if you see Northern Rock 2 years ago, you will see that.
Which
But
means,
in India, my hunch is you don't.
well,
In fact, one of the studies which I want to do in the larger picture of my industry is this.
in India, it will be interesting study for the private sector and foreign sector banks, not for public sector banks.
It's like public sector, new private sector, old private sector,
And
foreign banks. You get data in these four forms. And if you see the share price, how they are, even a simple correlation if you see, I think there would be a difference. Because foreign bank shares are not traded in India widely. So the more research work would be on, say, HDFC, ICICI Bank
Versus the other old private sector banks. That's interesting itself. I mean, whichever foreign banks are listed, that also can be, I don't know if they are any listed. At least some,
Yeah,
you can use a dummy to.
It comes back to the stability issue, whether it works or not. That's why, in fact, I can also argue that have a very high deposit insurance and have a very close eye on the assets of the bank.
But if you have a very high deposit insurance, doesn't it increase the cost of the bank to kind of pay the premium on those?
High deposit insurance limit. So premium
No, but premium has to be, I mean, premium, it is done by public sector companies. Premium must be very low anyway.
It's very low.
Yeah, but the thing is, as you increase the limit, obviously that premium cost will go up.
That's in your hand. What I'm trying to say is, whether if you have a very high deposit insurance here, then the depositor will not be required to, or will not definitely not be following the stability of the bank.
No, what I'm saying is, will it reduce the profitability of the bank?
Kind of,
Will it not reduce the profitability of the bank?
no, reduce the premium.
Why?
Not increase the premium, no?
But
अभी जो premium दे रहा है देने दो उसको.
But then you are expecting the hit will be taken by the deposit insurance company.
What I am saying is that if I am the deposit insurer, let's say I am the Reserve Bank who is also doing deposit insurance, which is in most places, even though it's a separate company, it's interlinked. So if that is the issue, what I am trying to say is, tell the depositor your deposits are safe. That's what England and all did. They said all deposits are safe. Then you don't have run on the bank. But you are converting this problem into a problem that you will have to look into the stability of the bank. You will have to see the banks do not, the assets of the bank do not lose value. Which I feel is easier than saying that I will not have deposit insurance. It's a free market, you do whatever you want to do. And then when the banks have a problem, you run around to save it.
No, I have one problem with that argument. One is that if you have a very strong deposit insurance, more or less like everybody is insured, then effectively the financial engineering and the risk taking will be even more on the other side. Because now banks know nothing can happen to my deposit, so I can do whatever I want.
Yeah, then you control it.
So then you're actually increasing even more the...
You say that you cannot go into equity market. You say you can't go to equity market, you can't get into derivatives, you can't hold derivatives of it. You want to securitize your loan, securitize, but you can't hold it.
No, but if you securitize a loan, isn't it like indirect way of entering the equity market?
If you securitize, you are throwing it out of your, you don't put it on any bank balance sheet.
Which is more or less saying the same thing as having a stronger regulation on the assets.
Yeah.
So that you can do even despite, suppose even if you have that stronger thing here, then that extra deposit.
No, if they react to share price.
So the thing is, see, if you have removed the reason of uncertainty, you have told them you can't invest in equity, you can't invest in
No, but you
derivatives.
can still make a loss. Yeah.
So that you can make, but the thing is that you, even if with the stronger regulation with the deposit insurance, will not really.
No, I get your point, but what I'm trying to say is that it is easier to handle monsoon, not tsunami.
No, the thing is, the moment you say equity and derivatives are not allowed, then having deposit insurance or not having deposit insurance doesn't make too much of a difference. That's what I'm saying.
No, but it does make a difference here. No? Like, some of my loans go bad, then I take over another bank, then the share price goes for a hit.
But the thing is, why does that happen? The thing is, suppose I have deposit insurance. Will that not happen?
That will happen irrespective of whether you have deposit insurance or not.
So that's what I'm saying. The deposit insurance is not the kind of crux here.
No, what I'm trying to say is that this kind of share price, volatility in share price is bound to happen. Okay?
This volatility will be much lower if you don't have this equity and derivatives and all those issues.
Not necessarily. Nobody understood equity derivatives, derivatives. You could, let's say, treasury profits. You could make a loss in that. Your establishment expenses may go up suddenly. Anything that happens. No?
So that will happen despite.
No, because you are making an assumption that the share price volatility is only because banks were investing in derivatives. Getting into derivatives and investing in mortgage securities. What is that? CDOs, etc. Securitization. Not necessarily.
No, what I'm saying, even if I take that argument, not necessarily, the deposit insurance doesn't kind of remove that problem.
No, it doesn't remove the problem. Problem will be there. But the run on banks or the depositors reacting to bad news
will be reduced.
Investors will react to bad news. That's part of the game. That doesn't affect the stability of a bank. But depositors will not start reacting to bad news. Bad news in this context.
But actually, if you really look at the empirical numbers, despite having no deposit insurance, de facto we have deposit insurance.
That's because we feel that ultimately banks will not be allowed to fail.
Then effectively, having or not having, not having is not an option. It's already there in a way.
Yeah, so you have a higher number, like suppose you open up the market.
So you make it more transparent, you're saying.
Make it more transparent.
Why do it kind of
Because you can tell the banks that you have a certain few banks. I'm not saying have this insurance for all banks, non-banks, etc. You have for a few banks and say these are the banks in which the deposits are safe.
But then the other banks will not get the deposits.
They will get by offering higher rates.
But then what will be the criteria of choosing these banks?
Which bank?
That you will give the full insurance for these banks but not for the others.
No, you can't have commercial bank A, commercial bank. We had scheduled banks, non-scheduled banks. You say that this bank, if you don't do well, you can't. See, allowing a certain portion of the system backing up is not a big deal at all. What we are afraid of is the systemic linkages. So you make a bad investment like Madhavpura Bank and all, we all made bad investments. You lost right at all. Banks are failing regularly in the US. It's a phenomenon that is there.
Like India, I think in India the banks fail are the cooperative banks.
So allow them to fail.
I think quite a few have failed.
They have failed, but we have overreacted. Reserve Bank has overreacted. Madhavpura Bank should have been asked to shut down. So you fail, okay, fail.
This happened with RRB.
Urban cooperative banks they are called. RRBs are different because RRBs have a sponsoring bank. That it goes out into another thing. But yes, unless you allow some.
Are cooperative banks also scheduled commercial banks?
There are some cooperative banks which are scheduled commercial. Actually, scheduled commercial banks, there is a legalese about it. The second schedule to the Reserve Bank of India, if it is a schedule of banks, and these banks can get facility from Reserve Bank. Reserve Bank of India says that I am going to include you into the second schedule of Reserve Bank of India Act. This means that you will be given, I will be lender of last resort, and you will be given refinance facilities, you will be given accounts, clearing facility, and you will be part of
the other cooperative banks don't have that facility.
Other cooperative banks. And for this, they will allow, if you are into this, then the Reserve Bank of India, has full control over your, they can inspect, they can do it. It's only after inspection and meeting certain standards that the bank is allowed to continue in this as a scheduled commercial bank. So before nationalization, scheduled status gave a certain, certain respectability in the market. So depositors, I remember as a professional when we opened a branch in Mysore, it was called State Bank of Travancore. It was an unknown bank there, so it was a State Bank group. People used to come and say, are you a scheduled bank? Because then there is a certain amount of respectability. In US you have insured deposits and non-insured deposits. There are a lot of banks whose deposits are not insured.
So they will be having higher costs.
So if you want to go there, you go there. You want to earn your...
That's like cooperative bank in India versus the scheduled commercial bank.
Yeah. I say just like going to the race course, I'm not going to the race course. Somebody goes to the race course and you want to help him out with.
I remember there used to be this, I think Delhi, I think bank still exists. Delhi Nagrik Sahkari Bank or something. So that guy used to come agent at home and he used to get a little higher interest rate,
Delhi Nagrik Sahkari Bank is not a scheduled commercial bank.
But they used to come an agent.
But Delhi State Cooperative Bank is there. Almost all state cooperative banks are scheduled commercial banks.
State means that must be Delhi government or something.
No, they have three tiers. One is called primary cooperative society. All your risk societies and other primary cooperative societies. Then they have linkage with, no, they don't have a linkage with urban cooperative bank. They can evolve into an urban cooperative bank. This Delhi Nagrik Sahkari Bank would have evolved into an urban cooperative bank. They need a license from the Reserve Bank also, and they need a approval from the Registrar of Cooperative Societies, and they are controlled by politics. I mean, it's a state subject. So cooperative societies are state subjects. So they are dual controlled.
It's a lot of mess there.
But they have a linkage with the banking system. That is the only issue. And if they become too big, then you need to control them. They can't go beyond the city. They can't, or beyond the district. District cooperative bank.
They also but have to do the CRR and SLR, no?
Yeah, they have to do, but it's not monitored by Reserve Bank banking division, but it's monitored by
Cooperatives.
urban cooperative division. That's in a little different way. If they hold money with another bank, it's considered as they don't have to hold with Reserve Bank.
That's a kind of a lax regulation in a way because...
Not really, because they hold it with another bank which is controlled.
No, in the sense overall, cooperative banks, the way they function, they fail quite regularly.
Yeah, lax regulation because of the political issue. Because it's a state subject and the local politics.
But then why people are not having information, still people go for these cooperative banks?
People, Eiffel Tower has been sold twice.
Misinformation is
Agreed.
No, I didn't know that this. When I was a child, that guy used to come, he was a nice guy. But and we went to the
linkages. Then people don't think that it could go bad.
Every month he used to have a monthly income scheme and monthly deposits and all.
That's better than any other bank. So you try it.
10 rupees every month and that
That's
guy.
why I feel behavioral finance is more important because what do? We take a call. 100 रुपए डाल दो चला गया तो चला गया कोई बात नहीं बैड नसीब में नहीं है kind of. So that is why first session we discussed why these customers come to us. Marketing professors always talk of why they customer, what is his spend need, why is he coming here. I don't know, I think it's greed basically. 0.5%, like urban cooperative banks are allowed to give 0.5% more or 1% more, so they give. There is a regulation. It's not that they are not regulated, but then
whom they give loan and all.
It's not professional.
And also the loans they might give to their own friends and all, and that's how they feel, I guess. But some have succeeded, I guess.
Yeah, Saraswat Cooperative Bank was a very huge bank, and now they are going out of the state also. And they have acquired another. Saraswat Cooperative Bank has acquired the oldest urban cooperative, Ananya Bank from Ahmedabad.
There's another one, Karur Vaishya Bank.
Karur Vaishya Bank is a scheduled commercial bank.
Old private sector.
It's private sector. Private sector.
But how is it that the bank is into two parts now? One is owned by ING, the other part is still independent.
No, there were two banks.
Oh,
One was Karur Vaishya is a community. VYA. It's a trading community in South India, Andhra, Karnataka, etc. So they had their own bank, but that was Vaishya Bank.
Oh, that has been taken
Karur
over.
Vaishya Bank was a Vaishya community bank. Vaishya community started a bank in Karur, which is in Tamil Nadu.
Oh.
Vaishya Bank was in Karnataka.
So the ING Vaishya now.
ING took over Vaishya, and at that time I think they felt that the local name should be there. And so they have continued with it.
But that's the only example I think where the multinational bank has taken over local bank, isn't it?
I think so. Yeah. I think that's why they were asked to have ING and Vaishya, because you remember layers that
That kind of
that kind of mental action. ING, yeah, they took over. I think that's the only one. Others are not. Foreign banks have some stake in other banks.
yeah, but it's like a fully
not
taken
fully
over.
This is a fully integrated one. And it's neither ING nor Vaishya. You go to the branch, it's Vaishya. You go to the head office, it's ING.
So I guess they have just some regulation RBI. I think it's somewhere trying not to let everybody know that a multinational bank has taken over a national bank.
But I think it was done at that time when you didn't allow branch, total branch.
Yeah, but the thing is, this is interesting that there is a lot of the private sector bank, multinational will be interested in taking over. Why ING was allowed, not others were allowed? There's some.
You can't answer this.
No, I'm saying this is.
RBI came out with a document saying that one was establishment of wholly owned subsidiaries. When nobody has established. Foreign banks have not established a wholly owned subsidiary so far. The other one was they suddenly realized that some bank had, or either HDFC bank had somewhere HDFC is more than 12%. HSBC had more than 12% in one of the local banks. I forget which one now. Then they suddenly said, no, you can't have 12%. They said, why not? They said, no, there is a regulation, only 6% or something. New regulation was formed. They have not been able to make up their mind. Then finally there was an argument, or there was a huge problem, because what are foreign banks? I mean, if let's say HSBC registers in India as HSBC Bank India Limited, like others do, they call this Gurgaon is full of foreign companies which are registered in India. Then it doesn't become a foreign bank, it becomes an Indian bank. Foreign banks are branches of banks incorporated abroad. So it's basically a lot of political will is required.
To clean up the whole thing.
Yeah. And it's not found necessary also.
Unless some crisis comes, I think this cleanup happen only when the crisis comes.
Yeah. And then there was a committee and they recommended that 6 new banks should be. Why 6 new banks? Why not no new banks? Why not 10 new banks? It's not like driving license. If you are 18 and if you can show your hand like this and run the machine little bit, you get your license. It's not like that. But in the US it's like that. They have a certain requirement. If you have that requirement, you open bank.
No, I think there is a problem because the WTO in banking industry, financial sector as a whole. I think that paper, there are a lot of details about that. It's all on a reciprocal basis.
No, that is a foreign bank opening a branch in India. Indian bank opening a branch abroad.
Yeah, but I think
foreign ownership in Indian bank. But what I'm trying to say is, you and I, let's say we want to open a bank. If you go and say, what are the requirements? The requirements are 200 crores. I said, okay, I'll get 200 crores. No, but you will have to apply and then they'll take a decision, and the decision that they'll take is no.
Same will be true, I think, in the US also. I think any foreign bank just cannot go and...
No. If a US citizen,
US citizen,
couple of US citizens want to open a bank, they have a set of regulations.
No, that is true. That is in India, possibly we have licensing issues that we don't allow more than certain number of banks. In the US, I think they might move that to that
No, it's not a question of more than certain number. Then in which case you must say we'll have so many numbers. Like in Singapore, you can't, you can't import unless you get an import. You can't own a private car. Because they have decided X number is the number of cars we'll have on the street. Like earlier, I don't know about now, but earlier to get an auto rickshaw license, there was only X number of auto rickshaws allowed in main city.
Delhi, I think that's the same problem.
Yeah. So it's not like that because they are not announced.
That gives a discretion. I think it's just...
Yeah, ultimately, the RBI has to take a call and they will see various things and they won't specify what they do. Because first, they used to say that you must have some experience in a bank. Bennett government doesn't have experience in any bank. Of course, long back they had a bank.
So it depends on the discussion.
Yeah, it is.
And
Totally.
political reasons are...
Political reason, I think, then you can...
Whatever. Oh, could be non-political. I feel like giving for Times of India. So they started Times Bank. No? That's a very funny thing.
Oh, there was a...
Times Bank was very cool.
And that, I think, could not sustain.
It could not, but when they gave a license, there was no way they could give a license. Like say, Kotak Mahindra was giving a license, okay, fine, but the Kotak was in the financial industry, we had done something. So now, Reliance wants to open a bank, why can't you do it? I still don't understand, you have to give it.
I think financial sector and also airlines, there are a lot of restrictions in all the countries.
That is, no, but now in India, you want to open an airline in India, but there are certain norms. You just say this.
But again, they will not give license now because the thing is, new more entries are not allowed. Same problem, discretion is heavy in this airline business. Also.
Yeah, but to some extent it has not been so bad. There are new people who
So,
are
if you see, the thing is, Tata have been applying for license from 3 different governments. They have not got a license. That's why I think it's a lot of discretion is there. There's a BJP government, there's a National Front government, there's a Congress government. None of them gave license to them. For whatever pretext.
Yeah, but
that's what I think.
RBI is really bad.
No, airlines also is pretty bad.
But the RBI can say that we are frozen, we don't need more banks.
Airlines also think the existing players, they don't want any new player to come in.
Yeah, in any case. See, in any business you don't want new fellows. The Parnola doesn't want new fellows.
Then effectively the discretion of the policymakers becomes the kind of a politics, or you can say the economic policy or whatever. They say that not more than that, it will not be sustainable. That's one. Because airlines are making losses, so if you bring in more, unnecessarily will be more problems and all. So that's, again, this is a regulatory issue becomes very, very important here. And internationally also, I will not allow any, like US doesn't allow any...
International then becomes international relations, You can't come here unless you allow me to come.
No country in the world allows any foreign-owned airline.
Banks, airlines, in fact, if you go in history, you had to be part of, there used to be guilds for different trades and they had to allow you to open. It's not that only India.
Like lawyers, in India still is a problem.
Lawyers,
Doctors and all, you cannot practice.
1:30.
Take a break and
Come back at what time?